Hey, I'm Joey. Welcome to the exchange. Let's talk inflation. Inflation's very, very top of mind issue for a lot of investors in the past 3 months. Really, we've had three different waves of kind of inflationary fears going forward. So early November timeframe, we had a very hot, inflation print, which has really continued into December and into January. And that's this big fear is, hey, when's it going to top out? Like, when is peak inflation going to happen? Or really, those fears, those kind of far right extreme fears are, by far right, I mean far right of the bell curve extreme fears are actually, allayed. The big fears we're going to have price wage inflation spirals. And really what happened was we had that hot print in November, then we had Omicron hit late November, early December timeframe, and then we had this Fed basically change of policy in early January timeframe, which really caused bond yields to massively increase in a very fast pace, which scared equities, and equities obviously are they're dropping off too because those future cash flows are potentially being less and less valuable later on down the road. But I mean, I think overall we might be near peak inflation right now. It's one of those things. Looking at actual raw data. I mean, if nothing else, it might be a localized inflation top. I mean, long term, we'll see. I mean, the supply chain issues are still happening. They're getting better overall, too. Even what you see reading CNBC and the Wall Street Journal, I mean, they're pretty, I guess, not fear mongering, but it's to some degree, they're kind of playing up the hype right now, and it's really not that bad if you look at the actual raw data. So, what I pulled up here is the ISM report. ISM is Institute for Supply Chain Management. It's a monthly report that they push out every month. So the last one's from January right here, which the numbers right now, we'll get to it later. But the actual cool part is you can actually scroll down real fast, get the actual, like what people are actually saying overall too. And they're mentioning, again, transportation, labor issues, inflation issues for manufacturers. Backlog orders are pretty strong still. Supply chain crunch, it's loosening a bit, but I mean, there's certain SKUs are still going to be out of stock for months and months and months. And that's kind of their big fear going forward is like, when's it actually going to stabilize and prices going to actually stabilize? They do overall trends based on these various charts. We'll look at some of these charts later. I think it's cool here. You actually see commodity short supply right here. So you're seeing right here aluminum products, brass, caustic, corrugate, electrical components, epoxy. So basically, if you're building a house, you're in trouble right now. Paper, plastic, resins. Again, all those things are very common in like a Walmart. You would walk around and see some of those things are very in short supply right now. Again, plastic packaged products. So it's just one of those things where it's just going to be it's almost like hotspots in the economy, hotspots in supply chain that we're seeing all over the place. But let's get the actual numbers real fast. So this is actually the U.S. ISM Manufacturing Backlog Index. As you can see, surprisingly, if you had to guess, you think, hey, backlogs are sky high, we're at peak inflation, things are happening very, very fast. It actually peaked in almost a late summer time frame. This is May 2021. So it peaked almost 8 months ago. We're actually in almost a straight downtrend the entire way since then. So, which is good because you imagine backlogs are a huge issue right now. And as backlogs come down, people start, the fear drops a little bit too from the actual retailers themselves. They stop ordering as aggressively, as fast, because as a backlog drop, basically time to delivery should shrink a little bit too. So if imagine you order from Amazon, and it's all of a sudden you have, hey, I want to order my package, but it won't be here a month from now. You're like, oh crap, I have to order 3x or 4x on my orders in case the buffer for risk and everything else too. Same thing for retailers out there too. They're ordering massive quantities because the supply chain, also the delivery times are all out of whack, all pushed to the far right there. So it's definitely a big issue there that we're seeing overall. But I mean, it's been very positive. And you saw post December, it's been a huge drop off. We're at 56.4 now, which almost matches 2018 levels, which is surprising. So we're actually dropping off pretty fast. This next chart here is U.S. Manufacturing Inventories Index. So it's basically like inventories they have on hand to actually manufacture their finished goods. Again, we had a peak time frame here, October 2021. It's dropping off pretty fast too. I mean, it's almost matching 2018, 2019 levels pre-COVID happening, which is a good sign overall too. It means, hey, we're actually catching up a little bit on the supply chain side. The last chart here we'll look at is Customers Inventories Index. This basically says inventories on hand for customers. So as you can see right here, I mean, we had a big drop off in looks like the June-July timeframe, then a big drop off October-November timeframe, which again, Delta variant, Omicron variant, these things definitely align very well too. So really what we're assuming here is post-Omicron, we should see and also post Q4, post holidays, should see a strong spike up in actual inventories for customers. So I mean, the inventory pressures, buildups will actually drop demand a little bit too. So as inventories build up, the manufacturing backlog should decrease as well too. And manufacturing inventories potentially could be flat though too. So again, supply chain should recover there to a degree right there. But ideally, we're going to have that basic compression of the actual basic time to order, time to actual arrival of your goods. I mean, which it varies by product right now, but you're hearing horror stories like certain products it takes months or potentially a year plus for some high tech products out there to actually get delivered. Last thing I'll look at here. This is actually not a great graph, but it's prices paid index. Basically, what are manufacturers paying for their actual raw materials and some of their goods overall too. Again, it has dropped since last summer, basically mid last summer, but it's not dropped a large amount. It's not been a big spike down. You can see right here in January 2020, really it's roughly around 50 or so. But right now we're still at 76, so we're still well above average prices pre-COVID. But again, the last 6 months, the downtrend has definitely been there. Looking overall forward, this should keep dropping, assuming no new variants, no new other issues. Hopefully this comes down. Which this is important though too, because this is what if what they pay is past the retailers, when retailers pay is past the consumers. So this is all basically almost like a forward-looking inflation indicator, which is looking pretty healthy right now. Hey, we just looked at the manufacturing ISM reports. This is the same thing for services, exact same format and everything else too, but this is actually the scary one. I think if you talk like non-transitory inflation, like long-lasting inflation, this is the one where it's, hey, we have those bigger issues I think going forward. But overall respondents, very similar things, a little more cautious, a little more negative to some degree. Again, supply chain constraints, challenging operations, labor shortages, etc. Stuff you'd imagine for any kind of service-based company. This is a construction company right here, so costs have escalated to what they believe are unsustainable levels. So even they're saying, hey, at the current price points, I mean, they're profitable, but the problem is just that it's killing off these companies, but they can't find a labor to actually fulfill some of these contracts going forward. So that's why you see some of this housing inflation and housing prices going up. I mean, part of it's all interrelated. So the things, if you saw a part of it, the rest of it should unwind hopefully pretty quickly though too. And that's what we're hoping for the U.S. economy. Again, business activity is increasing going forward. There's all kinds of issues. Again, stuff you'd imagine, stuff you read about, in just various CNBC articles, Wall Street Journal articles. It's nothing that's really profound or that crazy. Let's pop down to the commodity short supply. So appliances are short supply. Blades, chips, computers, and peripherals. And blades, I mean server blades, not like shaving blades. Construction contractors, subcontractors, PPE, COVID testing kits, etc. Short supply. PVC materials. So again, if you're any kind of construction equipment or construction site, you're having issues right now, whether it's a house or commercial construction, they're having issues. Let's check out the actual charts right now. So this is the services backlog index. Again, you can see this goes back to July 2019. So the last 3 years. You can see we had this big spike. Again, it's last fall, last summer, last fall we had basically the peak, and since then it's been downhill. The backlog actually is dropping quite a bit, which gives you hope that, hey, maybe some of this backlog will actually get fulfilled. Maybe we'll have hopefully prices come down in the near future, or at least stabilize in the near future. Let's go to the next one. This is Services Inventories Index. Again, it's not as dramatic as other charts have been, but this is going back 5 years. And you can see right here, we had that big drop off in inventories towards basically the end of last fall. It's been spiking up again. We want to be around that 50-ish, low 50s area ideally. We're at 49.4. It's definitely recovering. So inventories are recovering. We're actually building up of inventories, which is a good sign. Because if demand was outstripping supply so much, inventories would basically go to zero, and that's not what we're seeing. We're seeing the opposite. We're seeing inventories actually increase, which will lessen pressure on ordering new products, ordering new inventories coming in the door. Which again, it all ripples effect. So if one part of the system actually is recovering, other parts will actually recover with it too. So it should ripple out from there. This is the only bad graph I think of this entire video. This is services prices paid index, and as you can see, I mean it's dropped a little bit, but it's almost near a peak right now, and we've really been climbing pretty hard and pretty fast since the almost beginning of the pandemic all the way to now. And well, I mean we've seen it's relatively flat in the last 6 months or so, but again it's not been a drop off. Anything, I would say it's flat. My big fear on this one, this is what big fear I have, this thing U-turns, heads north again, and all of a sudden you have bigger issues going on. We have the higher and higher inflation prints, but this is the one chart where I'm seeing, hey, services wise, it's a dangerous area. And again, it goes down to services, labor constraints, etc. I mean, this is the big issue we're seeing overall too. But if this one flips south and actually drops off pretty hard, I think overall the U.S. inflation rate will actually drop pretty hard with it too. And that's why I see like the big, I'm almost like a base case scenario is inflation dropping down at 3-4% level annualized too, because everything we're seeing here last 6 months, it's if we can make it to June, July without having a massive inflation, high inflation scare, high inflation print, I think we'll bet base effects alone will push us into a very very stable inflation rate overall too. Hey, so beyond the data, I also want to talk about too, really what's the headwinds inflation is actually facing outside the actual raw data, and really looking at post Omicron is, hey, return to employment. So we're gonna have more labor participation more likely in February and March, April potentially timeframe than we had in December and January. Omicron was a big scare for the for overall economy and the global economy too. So that's definitely a strong headwind potentially for inflation, or not inflation necessarily, because it's going to increase wages, but also it's going to really increase labor availability for all aspects of the supply chain. So hopefully that should help out quite a bit. The other thing too is also looking at stimulus and child tax credits; those are ending. So that actual excess cash is actually already gone. So we're starting to see that those excess savings start depleting quite down. So actual consumer raw spending power is going down overall too. And inflation, all inflation is doing is dropping purchasing power down even more. So the actual raw quantities move are going to be less and less going on in 2022, potentially versus 2021. So we'll see what happens there. And finally, I put on a video on this too, is the actual student loan payments coming up May 1st. I don't think people realize that is a massive headwind. It's almost like a negative stimulus for the U.S. economy. So, I mean, these are all very deflationary trends I'm really seeing going forward. So, as long as we don't get a scary print potentially in February or March, and by scary I mean like 8% plus potentially. Those are some scary numbers out there too. But I think even a baseline, month over month, 0.5% month over month, or maybe 7.2, 7.3%, year over year, that's totally fine. That's almost expected to a lot of people out there too. Really, the scary part is if we get plus 8%, potentially that could be more damaging potentially going forward. But I think these headwinds are strong enough. We're going to see not that lasting inflation we're going to see. I think we're going to drop down quite a bit this summer time frame, maybe that 3-4%, where it's still pretty high, but it's not going to be as bad as it was in previous decades. But hey, let me know your thoughts, and definitely if you like the video, subscribe. Definitely watch student loan video. I think it's a great video. Kind of explains some of these economic details. But yeah, let me know, and have a good day.